Welcome to this weekly Friday chat. We're going to be talking about what else? Inflation, numbers, the Fed. It's a short one this week, so you'll probably thank me for that. Let's do it. Okay, so to stick with our theme of inflation, the Fed. On Wednesday, we had CPI numbers come out that shows it declined from the consumer prices rose 4.9% from a year earlier, which is down from last month's level of 5%. And the Fed last week raised its benchmark federal fund rates by additional quarter percentage point, which we spoke about, to 5.25%, a 16-year high. So does this give the Fed more ammunition to kind of pause its rates? We shall see. You can see here from the consumer price index inflation chart that we're looking at from a year ago, we're trending downward, but we're still not near the Fed's target. Then on Thursday, we had PPI numbers come out. PPI numbers rose modestly in April. The producer price index, which generally reflects supply conditions across the economy, rose 0.2% in April from the prior month, compared with a revised decline of 0.4% in March. That matched the 0.2% average monthly rise in 2 years before the pandemic. So what does this mean? Well, it just means we're kind of getting more data. Inflation's getting better, a little bit better. It's not coming down as fast as we would like. As we've mentioned before, the Fed wants a target inflation rate of around 2 to 2.1%. So we're getting there. The Fed did mention that they were going to be possibly pausing rates. Does this give more ammunition to do that? We shall see. What does the markets think about this? Well, as of this recording at Thursday at about 10:30, they don't like it so much.
Sell me out, get me out of the market.
So jumping over to our stock screen here, we can see that the Dow's off just under 1%. The S&P's doing a little bit better at 0.3%. So yeah, market really didn't love the inflation numbers on the reports because again, it's not really positive, but it's not really negative. So you kind of have that mix there where not much is going to happen. So kind of what we anticipated would be happening is kind of priced into the market. The one thing that you will see is yields are off. So when yields are off, bonds are going to do well. Bond prices are up. So our bonds are producing better. Well, that's a wrap on another weekly Friday chat, abbreviated edition, because quite frankly, I couldn't figure out anything else to talk about. So that's it. Have a great weekend. Remember, Fridays are for pizza. See ya.